It's time to start getting ourselves dialed in for this coming week, guys. So I'm doing a ton of technical analysis. Everyone knows, if you guys have been watching the stock market, especially over the past, realistically since 2022, right? Market has been trending down. Does that mean that we're not going to get some bounces here and there? Of course not, right? Market's always going to bounce. It's not just going to go straight down. Just like a raging bull market is not just going to go straight up. It's always going to have pullbacks. It's always going to have down days. What we need to understand is the technical levels, right? Especially for some of you guys who love to, buy the dip and you guys like to hold the dip. There's a lot of you guys out there, especially, a lot of you guys who watch this YouTube channel. A lot of you guys like to buy on red days, which is necessarily not a bad thing. But what I'm saying is, when we're trading below macro supply, if you guys don't know what macro supply is, you need to do yourselves a favor, join the Discord community, start, open up the books, get your pen and pad out so you guys can start learning technical analysis. It's not all about earnings. It's not all about what the company is going to do in 5 years. It's not all about, what bank or hedge fund or institution owns, whatever percent of the float of the particular stock that you're trading. None of that matters, especially right now in a time like this. We're looking at the SPY time frame, or we're looking at the SPY chart on the daily time frame here. What I want to note here is, could we bounce? Could we have some sort of dead cat bounce, right? Coming up, maybe Monday, maybe this coming week, maybe next week. It's entirely possible. We can't rule that out. As a day trader, as a scalper, full time, I want to let you guys know it doesn't matter which way the market wants to go. The market wants to go down, we're going to capitalize on it, but we want to know the levels we need to capitalize on. We also will need to understand that if the move goes against us, where the heck are we going to get out of this trade? We can't just be sitting here with a blindfold on, hoping that the stock comes back, to whatever stock price we bought it at. Could the market continue to flush? Of course. The market, if you don't think the market can go lower, the market will definitely show you, and I think it showed a lot of people last week, especially on Friday, that the market can go lower. So with that being said, what we're kind of looking at here is this big double bottom. Okay, it's clear as day. If you can't see the double bottom on the chart, it's time to make an appointment to get the eyes checked out. All we have to do is take a look here from February the 24th. We can see that day. I remember it very, very clearly. We had an initial washout on that day. I mean, just completely washed out. Market started to panic, and then it was about middle of the day, intraday, heading into the close, the market completely reversed. And not only did it eat up all of the losses, but closed green on the day, and we went on like a week rally, and then followed by a little bit of consolidation, and then like a 2-week rally after that. So if we kind of look at Friday the 29th, we're back down here again. Okay, we're back down here again. The question is what is the market going to do now that we're back here again? Now that, things are starting to settle, now that the majority, not all, but the majority of big tech earnings are starting to get behind us. Now we're getting to that middle back half of this earnings season here. What are we going to do? Facebook looked like it was going to save the market, did not. Apple, great earnings, did not. Amazon completely dropped the ball, did not save the market. What is it going to take for the bulls to actually start to wake up? What is it going to take for the bulls to actually start to reclaim some levels where we can actually start to look to the long side? If my chart looks like a mess to you, that's because it is a mess. There's supply zones running all over the place. What is a supply zone? It means a level of resistance. Let's just keep it at that. If you want to learn more, definitely head to my website, evolutiontraders.com. Get linked up with the lifetime membership so you guys can understand the strategy and how I'm actually navigating through this market, in these tough times, because that's exactly what we're going through right now in the stock market. We're going through definite tough times. I can definitely see the market bouncing this coming week. A couple of levels that we do want to look for: daily 5-day moving average. That price right now is sitting at around $420. If the market is able to reclaim that $420, we do have room back up to the 10-day moving average, which is sitting at around $429. So That's going to be the big reclaim there. I think that's going to give us a little bit of the dead cat rally, push up back into the upper range here of this price action. But also keep in mind, though, if we do start to bounce and start to reclaim the 5-day moving average, and we somehow get rejected this week and start to get a little weak, and we start to now lose those moving averages, we can then put in an extended leg down. One thing that I do want everyone to keep in mind, the IWM, which is the Russell 2000 small caps, are already in a bear market. The triple Qs, which is the NASDAQ 100 mega cap tech stocks, are already in a bear market. The last two to hit bear market territory is the S&P 500 as well as the Dow. So we already know that the small caps have been leading the charge and pretty much already down at the bottom of their ranges. They were the first to kind of hit that bear market correction territory. And now we have the mega cap stocks as well as the triple Qs also down there as well. Is the SPY going to be next, followed by the Dow 30? And if that's going to happen, we're going to need to lose the lows of $410. $410 right around that range is going to be those February lows as well as Friday's lows. If we do start to lose that, I could see us getting into that 20% correction, spelling another big leg down. Obviously, then if we do lose those lows, we're going to need to wait for some sort of bounce consolidation and back test before we can think about getting long or think about, you know, kind of shorting that continuation of that macro flush. Definitely something to kind of keep in mind. Also, what you're going to want to do is kind of keep an eye on the triple Qs. What do the triple Qs do on Monday, Tuesday, Wednesday? That's going to kind of tell you and help you out with this SPY trade here. So if the SPY does decide to hold these levels here, we can definitely use 410 as a stop loss and trade this back up into the range of around 420. You are going to have to give yourself a little bit of wiggle room in that trade. Just trust me when I say use $410 as your absolute stop. It's not even something to think about here. We need to use that 410 as an absolute stop. The first price target that we're going to be targeting is going to be 420 on a bounce. Whether you choose to scalp that move, maybe take a point here or there, or whether you want to actually let this trade develop, wiggle around on you, and swing this, I'm telling you right now, being that we closed at $412 and currently $413 on Friday on the after hour session, you're going to need to give yourself $3 worth of risk here, $3 worth of wiggle room. Any close on a daily candle below $410, all bets are off. You have to exit the trade before you get stuck and trapped on a potential another leg down here. Hope this kind of helps you. If you guys want more information, more help, join the Discord. That link is down in the description box below. If you guys would like a fantastic free, completely free 30-minute training video on how you guys can scalp and day trade the first 1 to 2 hours of the market open, that's going to be the first link down in the description box below. And I'll see you guys all in the next one.